Welcome back, everyone, to another Explainer. Today, we're diving deep into the Polymer Bazaar Market Intelligence Report for the fourth week of August 2026. If you're navigating the polymer markets right now, you already know how incredibly fast things are shifting. So our goal today is simple. We're going to cut right through the noise, structure the data, and give you the absolute core insights you need to understand exactly where prices are heading, and more importantly, why. So get ready to take some mental notes as we break down the latest actions straight from the trading floors. All right, let's just jump right into the overarching theme of this week's report. Honestly, I'm calling it the Great Market Standoff. We're seeing some really intense upstream pressures right now. We're talking rising crude oil, climbing raw material costs, and these unexpected maintenance shutdowns that are really tightening up supply. Now, normally, that pushes prices straight up. But right now, they are hitting an absolute brick wall of downstream resistance. Demand is just sluggish. End users literally can't pass these higher costs along to consumers, and buyers are strictly purchasing hand-to-mouth. It's a massive tug of war, and this tension is exactly the lens we need to use to view every single polymer we're talking about today. To make sense of the 13 different polymers in this report, here is our roadmap. 1. Core commodities like PP, PE, and PVC. 2. Styrenics and polyesters. 3. Engineering plastics, and 4, we'll wrap up with the final market takeaways. Okay, part 1, core commodities, the heavyweights. Let's see how this macroeconomic standoff is impacting PP, PE, and PVC. First up is polypropylene, or PP. The forecast here is basically range-bound, but we are seeing a slight upward bias. Why is that? Well, upward cost pressures and thin inventories are providing a mild baseline of support, which gives the bulls a slight short-term edge. But because downstream demand is still so muted and supply is actually gradually rising, that upward potential is totally capped. Buyers are actively resisting, so prices can really only inch up so far before they just hit a ceiling. Now, polyethylene, or PE, is essentially the poster child for our main theme this week. It's a complete supply-demand stalemate. We've got additional maintenance shutdowns that have noticeably tightened spot availability. Upstream suppliers obviously see this, and they're holding their price offers very firm. On the flip side, downstream plants are showing some modest operational gains. And yeah, we are seeing some opportunistic dip buying. But overall, the resistance to higher quotes completely persists. The two sides are just staring each other down, forcing prices into total gridlock. Moving over to polyvinyl chloride, the picture is definitely a bit softer. PVC futures prices are actually slipping right now, and that's actively dragging spot offers lower. Producers are basically being prompted to either hold their quotes steady or just pause their sales altogether and wait it out. Because of this, buyers are restricted strictly to hand-to-mouth procurement, just snapping up lower-priced lots as they appear. So expect near-term spot trading here to remain soft and highly volatile. Moving right along to Section 2, Styrenics and Polyesters. Let's look at how styrene futures and raw material costs are steering PS, ABS, PET, and EVA. For polystyrene, we're really looking at a localized story, specifically over in the Plastic City Bazaar. Styrene futures are trading sideways, but they are staying at high levels, which provides some effective cost support. The sentiment is, cautiously optimistic, but the market is dealing with this intensifying supply-demand imbalance. Actual trading right now isn't about pushing new highs. It's really just focused on digesting the previous gains through localized fluctuations. It's a really similar story for ABS. Petrochemical manufacturers are facing significant cost pressures from those same high-level styrene futures. Coupled with tight supply in specific areas, traders are being forced to flexibly adjust their prices. But here is the roadblock. Downstream demand is incredibly limited. There is just exceptionally low acceptance of these high-priced goods. Because of that buyer resistance, you should definitely expect to see very narrow trading volumes in Plastic City for ABS. And this dynamically illustrates the PET narrative. Modest gains in crude oil and feedstocks are lending some baseline cost support, which is pushing a mild upward bias. But on the other hand, downstream buyers are actively avoiding bulk commitments. This lack of buying volume has actually caused operating rates across bottled chip units to dip, which is squeezing producer margins even further. It is a really tough spot for manufacturers right now. Okay, plot twist time. Breaking the mold slightly from the rest of the pack is EVA. The spot market sentiment here actually remains quite positive. Overall, price trends for EVA are favored to move upward rather than downward, and that's heavily bolstered by firmer raw material costs and ongoing factory maintenance announcements keeping supply in check. It's really the one clear pocket of upward momentum in this whole report. All right. Section 3, Engineering Plastics, where high costs are meeting some incredibly strict purchasing caution. Let's see how geopolitical tensions and elevated crude are impacting these specialized materials. The report's outlook on PA6 can basically be summed up in one phrase. It's forcing a cautious wait-and-see stance. Elevated raw material costs have created a very solid price floor, meaning prices really can't go much lower. But that downstream resistance we keep talking about, it is in full effect here. High quotes are forcing buyers to freeze up, and buying for PA6 currently remains limited strictly to immediate, essential operational needs. The market direction here is entirely handcuffed to whatever feedstock movements happen next. And it's practically a carbon copy of that story for PA66. Sustained upstream cost pressures are driving producers to test the waters with higher offer levels, but they are just hitting a brick wall. Downstream buyers are responding with immense, strict purchasing caution. Because costs are high and buyers absolutely won't budge, near-term prices are expected to just hold firm right where they are. For PC, or polycarbonate, the absolutely crucial factor right now is poor cost pass-through. Yes, gains in crude oil, ex-factory price hikes, and reduced supply from major plant maintenance are strongly supporting the market floor. But manufacturers trying to pass those costs on to end users are completely failing. The end users simply won't absorb it. This is capping any further gains, leading to an expected period of high-level consolidation as the market just tries to absorb the recent increases. PBT is directly feeling the heat from those macro-level factors. Geopolitical tensions and rising crude costs have pushed raw material prices significantly higher, which drastically raises production costs. Buyers are, predictably, resisting these elevated levels and buying strictly on a need basis. However, there is a glimmer of future activity to watch here. Buyers are anticipating some pre-peak season restocking, which means prices are expected to remain steady at these high levels until that buying wave actually triggers. Unlike PBT, pmma fundamentals remain completely unchanged. We're seeing flat MMA feedstock costs and stable supply. Because of sluggish new orders and generally weak downstream demand, trades are currently limited strictly to sporadic essential purchases. Consequently, the market is set to maintain a very tight range-bound pattern for the foreseeable future. And wrapping up our polymer breakdown with POM, we see a super familiar theme. Short-term sentiment is expected to stay largely in a wait-and-see mode. Unscheduled plant shutdowns and manageable inventory levels have kept the core fundamentals intact, meaning mainstream offers remain mostly unchanged. But pervasive buyer hesitancy continues to slow overall momentum to an absolute crawl. Which brings us to Section 4, Final Market Takeaways, and what all this data actually means for your immediate procurement strategy. Look, if there is one single thing you take away from this explainer, it's that this market is entirely dominated by need-basis, hand-to-mouth procurement. Across almost all 13 polymers we covered today, buyers are refusing to build inventory at these high prices, creating a massive stalemate against upstream suppliers who flat-out refuse to drop their quotes due to their own rising costs. With the market locked in this tense standoff, having real-time data is literally your only edge. I highly recommend leveraging the Polymer Bazaar AI chatbot. Just open up WhatsApp, type the word China, and send it to +91 93746 24365 for instant AI-powered replies and market updates. You can also visit polymerbazaar.com for the full detailed data. As we head into the close of August, all this data leaves us with the ultimate multi-million-dollar question for your supply chains. Who is going to blink first in September? The upstream suppliers or the downstream buyers? Think about that, adjust your strategies, and we'll see you in the next explainer.